Okay, let's get into things. Welcome back, everybody, to episode who knows what. I think we're at like 5 or 6 of Good Morning FinTwit. This is a weekly Monday morning space starting at 9:20 a.m. where myself and Stock Market News host, we go over breaking news from the weekend, earnings plays, things on the calendar, stock option plays. We also have a guest up each week. This week we're going to have Daniel Kline. And then we're also going to have Gurgavin and Peter Tuchman will be on at 10. Peter Tuchman will be on with us from the New York Stock Exchange. We might have some time to ask questions at that point, but for now, we're going to get rolling because we have a bunch of breaking news stories from the weekend, and then we want to get into some option plays, a lot going on, looking for a good day in the market. All right, Evan, I'm going to turn it over to you to start out with some of these news stories.
Awesome, thank you, Gav. Dude, as always, it was a pretty freaking busy weekend, and we kind of got a nice busy morning so far today. So just a couple stories that we had from over the weekend. The first one was from yesterday, and it was about PayPal. And so PayPal is actually letting customers sometime this week. I want to say it was Wednesday, but I believe that the real thing was something. I want to say it was Wednesday, but I believe sometimes this week. But they're going to allow customers in the UK to buy, hold, and sell cryptocurrencies. So this is really interesting. This is PayPal's first expansion outside of the US, having to do with crypto and crypto products. So it'll be really interesting to see how this kind of does going forward in any number breakdown. But I think that overall, what I'll be watching is next time they report earnings, just see how the momentum goes with with crypto purchases and everything like that. I don't expect them to break down how the UK crypto market is doing unless it does pretty freaking amazing. But so I would not expect to see a breakdown of the numbers, but I would really kind of watching how it changes the trend of their crypto revenues if that does happen. Next story was from I believe Friday or Saturday, but it has to do with Citadel and Melvin Capital. So most of you guys will know who those people are. They kind of were massive names back in January around the whole GameStop fiasco saga, but they're still kind of in the news now. So back in January, when Melvin Capital took a couple of puts against GameStop and other similar stocks, and we all know what happened. They ran up in their face. So Melvin Capital was in a tough situation where they needed money, and Citadel and actually Stephen Cohen, who now owns the New York Mets, he is the manager at Point 72 Asset Management, and together they invested $2.75 billion into the hedge fund Melvin Capital back on January 25th. So in return for that investment, they it was a rare intra-month investment. So normally these type of investments are more long-term. A strategic partner in the hedge fund. This one was intra-month, just trying to make this hedge fund survive so they can get past to the other side of this whole GameStop everything situation. So they received non-controlling revenue shares in Melvin Capital for 3 years. So if you're kind of just looking at how these companies are investing, they're putting in X amount of dollars for the next couple of months, but they're getting revenue share over the next couple of years. So you can kind of see how when you go in and playing in the distressed capital market, a company like Melvin who needs the money right now, you tend to get pretty nice deals. So Citadel does plan to keep its revenue share going forward, but Citadel has reportedly redeemed roughly $500 million of the $2 billion they put into Melvin Capital. So that just means that they want the money back. So watch that going forward. I don't expect too much to come out of this. More just kind of, oh, this was Melvin back in the day getting hammered for GameStop, and now they're doing more like this. But I think that it kind of shows maybe where Melvin's at now, that they're able to pay this back, or at least we would think Citadel wouldn't just ask for it when they knew Melvin would be able to pay it back. But it would be really interesting to see going forward, see if Melvin can, keep its climb back from its lows back in January. And the next story I got for you guys actually has to do with Boeing. So I am pretty into the whole space and, space tourism, space everything sector. I love it. So this was the type of story that maybe is more intriguing to me than some of you other guys, but I think you guys and girls should like the story. But Boeing has committed to invest in Richard Branson's Virgin Orbit planned SPAC, which is planned to come out later this year. I had the company that it was going to merge with in front of me before, but let me go and get that. But Virgin Orbit plans to list on the NASDAQ through a merger with NextGen Acquisition Corp, which is a SPAC. Let me just get you guys the ticker right now so I can have that in front of me. But yeah, so Boeing has committed to an investment in that SPAC. The SPAC is planned to go live at a valuation around $3.2 billion. So just that's something I'll be watching as the space tourism, space whatever kind of gets built out and there's more stocks to invest in besides just Virgin Galactic. You know, I don't know how different it is when it's Virgin Galactic versus Virgin Orbit as the two main, pure plays on space. But nevertheless, just another player in this area, that stock that you guys can invest in and watch, or possibly just kind of, just follow. So this is more of a stock for me that I am looking forward to following just in the space, but we'll see what happens with this going forward. But the ticker that I have in front of me, I believe, is ticker NGCA. Nick, I see you got your hand up quickly. You got anything to add with this story?
Yeah, I was just gonna double check the ticker. Yeah, I think you're right in that. I was gonna say there's also another SPAC with the Virgin Orbit with the Next Gen Acquisition Corp. That will be VORB. So lots of tickers and lots of space SPACs and SPACs happening.
Awesome. Yeah, no, I love this sector and industry, and hopefully can continue to grow out. It's, we obviously know where it is right now. It's super speculative, but hoping that, with this type of stuff and these moves, that more and more legitimate companies will get in and the space can be built out. But I am gonna, as I move over to the next story, I'm gonna pass it over to Gav to talk about Visa and what they did this morning.
Super interesting story coming from Visa. So as I'm sure many of you have come to your awareness at this point, we're kind of in the gold rush right now for NFTs. These things have been flying off the shelves. Marketplaces have been expanding. People are starting their own projects. Visa has decided that they are jumping into the NFT game. They announced today that they had purchased their first NFT, and they bought CryptoPunk number 7610. I don't know what that looks like off the top of my head, but you can go ahead and look it up because all these NFTs are public. You can look on things like OpenSea. If anyone's unfamiliar, OpenSea.io would be a place where you could check out different NFTs. There were several quotes that they came out with from that story. First one where they said, Visa has built a collection of historic commerce artifacts from early paper credit cards to the ZipZap machine. So it's not quite clear whether this is something where they'd be trying to get in it to, perhaps be part of the fun or, make some or something like that, or whether this is just something where they're looking at it from a perspective of, we want to be part of history, something along those lines. And then after that, they said, first and foremost, we want to learn. We think NFTs will play an important role in the future of retail, social media, entertainment, and commerce. So now they were hinting at, okay, we think this can be something where it's actually perhaps a use case for us. And they said they also wanted to signal their support for the creators, collectors, and artists driving the future of NFT commerce. And that lastly, they wanted to collect an NFT that symbolizes the excitement and opportunity of this particular cultural movement. So a lot to unpack there, but in addition to trying to be historic and perhaps a use case, they're trying to be a part of the community as well, trying to fit in from that perspective. And at the end of the day, them going out and buying one, it's a news story, right? It's them going out and driving up a little bit of traffic around the name, but it sure doesn't hurt when you're kind of looking at an industry that's pretty early, in the opinion of many. And Visa stock or Visa company can use whatever boost it can get, since that's not one that moves much too often. All right, Evan, any other news stories you want to cover today?
I got a couple more on the back end of this, but I'm looking back over. It's 9:30 right now. The opening bell is going off. So I was thinking that the futures, when I was looking this morning, were down, but I'm quickly looking at the heat map of the market right at the open, and it's looking about 5 to 6 going up. So like 80 to 90% of the stocks were in the green, looking like at the open. So looks like a very nice green start. That's pretty awesome to the week and to the day. But we'll see how this stuff plays out a little bit.
Yeah, absolutely. All right, so you want to hit on some of those other last stories that we have, and then we'll go into some stock stuff and talk with Dan?
Perfect. Quickly, before I do that, I don't know why the Bullish Rippers account isn't able to get up here. I see you accepting
I see it. I see it up here as a speaker.
Oh, do you? Okay. So I'll quickly shout out that Bullish Rippers has kind of given us a little bit of money so that we have a trade of the week in here, and we want to kind of go full into it, be able to buy stuff and be able to take a lesson out of it. So Bullish Rippers really kind of allowed us to do that. So if you guys want to check them out, just kind of, we have a tweet linked in here at the top. Just go in, like the tweet, check out the page. That would be really awesome. While you guys are doing that, check out all our speakers. We got Daniel and Nick up here right now. Daniel with 7 Investing is really awesome. Nick gives us a lot of great news stories. We have a couple people coming a little bit later, but just make sure you check out all our speakers, giving you guys really, really great information. But with that said, I'm going to get over to the last story or two I have. I'm going to kind of keep these a little bit shorter than the other ones. First, Tesla. So Tesla over the weekend began officially delivering Model Ys in Europe. This took a while. I don't know the exact time of when they started delivering Model Ys here, but it's taken a little time, but they're finally getting them across in Europe. We'll be watching for the ramp up of that in the coming quarters. And yeah, next story I got is Target. So this one was actually Nick here sent it to me. So shout out to you for that. But Target is planning to nearly triple the number of Disney shops inside its stores to more than 160 by the end of the year. So I'm sure a lot of you guys have gone shopping and seen this kind of store concept, like a store within a store. I remember a year or two ago, I was shopping in a Kohl's with my family or whatever, and there was like a Nike or Adidas full on just like little store within the store, which was pretty cool. So it's interesting to see Target kind of continuing with this model. The company has also, done some similar stuff with Starbucks, Ulta Beauty, and then now Disney as well. So really interesting to see how companies like Target and other retail stores are trying to get people to come in. I know I saw last week at some point, Amazon announced that they're kind of possibly getting into the whole like Macy's space of a retailer. The word department store. That's what I was looking for. They're looking to get more into the department store space. So it'll be really, really fascinating to see how this retail industry really develops going forward and see where it goes. Because it feels like everyone during COVID kind of ruled all these companies out. But I'm going to keep moving to the last story I have in front of me. This one's a little more complicated, maybe not super complicated, but it's a little harder to get the point across. But Intel has won a government contract for a project to develop a leading edge foundry ecosystem. So what that means is a couple months ago, the U.S. was talking about how we want to have our own chip production capacity, semiconductors, and this is kind of going on that pathway to doing that. A foundry is just a chip making plant, more or less. That's all you guys got to know, really. So Intel is kind of leading the first phase of the DoD's ramp up in this area, trying to build out the foundry infrastructure. Intel will work with industry leaders, including IBM, Cadence, and Synopsys as a part of this. And yeah, I think that's pretty much good enough with the story, the technicals that you need to know. I'll pass back to Gob to keep us moving.
Sounds good, man. All right. I think that we're going to move into the section with Dan for now, and then I'll probably do the stock and option plays after that, just because I want to give them a little bit more time anyways, towards around 9:45 to be able to see if things are breaking through support or resistance. So without further ado, Dan, it's awesome having you on. Been a little bit since you were on a space, I think. Would love to hear from you as to what you're eyeing this week in the market, if there's anything that sticks out to you. I know you do some research pretty often, so yeah, would just love to hear from you.
Yeah, absolutely. Thanks for having me. So, first of all, if you thought Target wasn't going to be successful because of COVID, I think you've pretty much missed how Target operates. This was a company that was incredibly well set up to switch to delivery, to switch to curbside pickup. That being said, I love what they're doing in their stores. We have a Target. I'm at our vacation place, so I'm in the Disney area right now. And about 4 miles down the road, there is a Target that has a completely redone store. There is a Disney store within a store, and it is dramatically better than any of the on-campus Disney stores. It's just so much easier to shop. There is a liquor store that feels like a local liquor store. There is a beauty section that feels like its own store within a store, though it's not a co-located Ulta Beauty, which is coming to many Targets. So I really, really like what Target has done. The bigger question in retail, and I'm getting to a point on the market this week, is really the Macy's and the Kohl's of the world. Those are the companies that could go either way. And frankly, while there have been some good signs from both of them, I don't really like what either of them has done, because the reality is they don't have a lot of standout merchandise. So you mentioned Amazon going into department stores. Amazon's going to launch 30,000 square foot department stores, and it's going to focus on top net level, like name brand items and Amazon's own items. Why is that important? Because Amazon has dozens of owned and operated clothing brands, and you don't buy them on Amazon.com. Nobody goes to Amazon.com and sees like a brand of underwear or dress shirts pop up or bathing suits that they've never heard of the brand and buys it. But Target has had huge success with owned and operated brands because they can show them off in their stores. I was fairly bullish on the idea of, geez, maybe Amazon and Kohl's could partner, show off the Amazon stuff in Kohl's. That could be a lifeline to Kohl's. Well, if Amazon's going into that space, they may not do that. But let me throw out that maybe that launching department stores is a gambit that Amazon wants to buy Kohl's, but wants to do it at the right price. I'm always wrong about these things. I thought Amazon was going to buy Radio Shack, so I'm probably not right there. But what am I watching this week? I don't generally watch things on a daily, weekly basis. We take a very long-term approach at Seven Investing, but I do think that right now there are some really strange market conditions happening because of the pandemic. You're seeing people go, "Oh my God, we have the Delta variant. Things are not shutting down, but maybe tightening up a little bit more. Nobody's going to travel." So I'm watching to see if maybe the cruise lines tank, maybe some of the travel related stocks. I'm not a big believer in airlines in the first place. But if stocks in that space or that are really impacted by tourism, like some of the restaurant stocks, is Starbucks going to take a big hit because a lot of their dining rooms are closing? I'm not sure Starbucks sales slow down at all, given how good they've gotten at serving you in the drive-through and serving you via pickup. And hell, I ordered delivery Starbucks, which is ridiculously expensive because of how that works. So it's one of those things where I do think this week you might see something really strange, like a Royal Caribbean drop by 25%, or some other stock that's on my watch list that I talk about. I also think you might see an artificial inflation of the movie business because there have been all these reports, and we're going to talk about this in our live show, Seven Investing Now at noon across all social media and wherever you can watch a show today. Free Guy did reasonably well. It's done 130 million in global box office, and this is being pitched as some sort of giant hit. If this was pre-pandemic, this would be considered a massive failure for a movie of this size. So be really wary of any of this, like movies are back, but maybe some of the streaming services take a hit because of that narrative. So it might be a good time to keep an eye on Netflix and Roku, and I doubt Disney Plus will take it. Disney will take a hit because they're the benefit of the positive news. But if people go negative on Disney Plus because they think somehow traditional theatrical releases are going to be a thing, they're getting it really wrong. So I might be a little more tuned in to daily news than I normally am. Speaking of which, the FDA has just granted full approval to the Pfizer BioNTech COVID shot. So that's a little interesting. Sorry, I talked for too long. What questions can I answer?
Well, no, that was awesome. That was a lot of information. It sounds like you're pretty bullish on the future of brick and mortar retail transitioning through this COVID period.
So really good companies are going to be fine. We still like to shop. Remember, less than 14% of all sales are online. So we're still largely shopping in stores. And a lot of experiences. Look, do you go to the mall because you need a shirt? Or do you go to the mall because it's fun to walk around the mall and you go to the food court? Maybe you walk into GameStop and look at video games, and maybe you wander through a Books a Million and write down some books you're going to buy at home on your device later. There is an entertainment factor. Nobody goes to Five Below because they're like, you know what I need? Big League Chew. If I don't have Big League Chew, my day is good. But you go to Five Below and you're like, oh, cool, they have Big League Chew. I'm going to buy that. No, a $5 yoga mat. The stores that are well run, your Five Belows, your Dollar Generals, your Targets, your Costco's, they're going to be just fine. They're going to thrive. And if you take a Costco can go really slowly to meet digital demand. And they've never had to innovate. They've never had to do anything quick. They've just had to have just enough. And even when you look at the restaurant space, Starbucks has been a blazing leader. Most of the other decent players, and Dunkin' Donuts is no longer publicly traded, but Dunkin' Donuts didn't have to invent anything. They just had to watch and see what Starbucks did and then go, okay, mobile order and pay works. Let's copy that. I mean, they did it a couple weeks ago with Dunkin' Cold Foam. So there are going to be winners. There's absolutely going to be losers in retail. I mean, I talked about Macy's and Kohl's. They could make it, but I wouldn't bet on either one. I think Kroger is one that people are getting wrong. They're doing really well because of the pandemic. I don't think they're going to do well in a market where their chief competitors are Amazon and Walmart, who don't have to make money in the grocery space. That's pretty tough when your core product is grocery. So yeah, I am bullish on really good retail. And look, I'm not an investor and say like Ross Dress for Less, but there is a clear customer for that brand that's probably likely going to continue shopping there. Ulta Beauty, again, I'm not a customer, but they've done a really good job with their footprint, and their deal with Target is going to pay absolute dividends because it's going to save them a ton of money on real estate. And once you've gotten your your makeup colors, once you know what you need to buy, then they have a really robust and healthy digital delivery system, and you don't need to go back to an Ulta Beauty. So once they have you, they have you.
Very, very fair points. Just showing that the great companies are the ones that are going to be fine through this, and they're going to continue moving, and it'll, in fact, probably weed out some of their competition. Evan, do you have any questions?
Yeah, I think that one thing you said there at the end kind of so it was like once they have you, they have you. And one news story, kind of back to the streaming part of this. One news story that I saw this morning, Nick posted it as well, was talking about how T-Mobile is giving out free Disney Plus, no, free Apple TV Plus to T-Mobile customers of some service they have, Magenta or whatever. And I think that kind of plays at the underlying theme of that a lot of these companies, a lot of these streaming services, just need to get people in the door right now, and then hopefully convert them out after. But really, kind of just with that, I'll turn it more into a question. Do you see that? Like, I know that like pretty much all of them kind of do that type of partnership where you have a product and you get a free service, a free streaming service for a year or whatever. But do you see that as like a way for this industry is going to keep driving subscribers? Because like it seems like they just need to get people in the door.
So the problem is you have to have good content to keep them. So if I get Disney Plus for free, and I don't, I pay for Disney Plus, but I'm a Marvel and Star Wars fan, or if I have a kid who's watching Disney content, there is zero chance I will ever get rid of Disney Plus because almost every Friday there is a new Marvel or Star Wars show that I want to watch. So if I'm looking forward to the newest episode of Loki or What If or Mandalorian, there's zero chance I'm going to cancel Disney. Now, I would argue that for me, Netflix would be something I'd come and go with. But I live in a house with two other people, and my wife and son are really into true crime, so Netflix has a lot for them. Beyond the two of those, you've got Amazon Prime, and I don't think anyone subscribes to Amazon Prime for the video, even though I do watch The Boys, and there are some shows there I care about. Everybody else doesn't have the content. So sure, I get Discovery Plus because I'll throw on Diners, Drive-Ins, and Dives in the background. And boy, do I wish, T-Mobile or somebody else paid for that for me. But I don't think I'm particularly typical. I think a lot of people are going to come and go in these services. And, maybe you get Apple TV Plus to watch the morning show, but there's nothing else you care about. Or like my mother got Disney Plus because she wanted to watch Hamilton, and she's not the typical Disney customer. So I think for the most part, there's going to be a ton of consolidation in this space because Peacock and HBO, and there's a lot of crap out there. Like, and I know HBO has a long history of top tier content. They haven't had a show since Game of Thrones. So there are a lot of problems with everybody else. And yeah, they're going to use these gimmicky, you get it free strategies or, $1.99 teaser deals, or Apple just gives it to you when you buy a device. But does anyone get really excited about Apple TV Plus? I have it, and I don't remember that it exists most of the time.
Yeah, pretty much agreed. The only show on Apple TV Plus that like I've watched really and enjoyed is the Ted Lasso show. But besides that, there's not much on there that I go out there and search out.
My brother's a Premier League soccer exec. Enough people have told me to watch it that I'm not going to watch it.
I'm sure you hear enough about it in your personal life. You don't have to.
Yeah, I tend to be very contrarian on television. I sort of have to come to something on my own to watch it. And frankly, I'm so backed up with stuff I want to watch that list is pretty tight. I'm sure at some point I'll have the flu and I'll watch Ted Lasso, but I've been saying that about The Wire for like a decade. So, but look, I think a lot of streaming has to go away. Tell me the justification for Peacock. Like the Olympics did not get tens of millions of people to care about it, and I'm not so sure. Like as much as they might have one or two shows that I want, I might just go buy that show. Like I want to watch the show Heels. I'm a pro wrestling fan, and there's a show on Stars Plus set in that universe. I might just go buy the show on Amazon. I'm not going to go get Stars. And that's probably stupid because I could get Stars for a month and watch it. But that being said, like I'm not great about remembering to cancel. So I think some of these shows might break out. And I think you might see more shows like launch on Peacock, but then like air on NBC during the summer. The whole model, like it really only works for Disney and Netflix, and to a lesser extent HBO because of the cable legacy. And I do think Discovery Plus has a chance just because its content is so cheap. It's really cheap to produce like Chopped or House Hunters and that kind of stuff. But I think there's just way too much going on, and I wouldn't bet on anybody except Disney and Netflix.
Great points all around. I do want to keep us moving. Evan, do you have anything else you want to add?
Truthfully, I kind of just agree with that final sentiment there. I love Disney Plus. I think it is the best streaming service, has the IP, has whatever. I wish that I could buy directly just Disney Plus. There's a lot other behind it, and I love Disney, but it gets me my type of investing growth and whatever. It does get me a little bit less excited about it. So I would agree with the overall sentiment that Dan had in general.
Perfect. Awesome. Thanks, Dan. Welcome to hang out also at 10. We'll have a little bit more back and forth discussion. Pop probably like 10:05. We got to get through a few more things here. So everybody, as you know, each week we do a segment where we go through option plays. I just want to explicitly state that these option plays are coming from Shark of Traders, so you can check him out. His account has absolutely been soaring. So if you type in Shark of Traders, he's up like 10,000 followers in the last month or two. So we chatted a little bit about this last night. And then also big shout out to Bullish Rippers, who is actually going to put money down with us to help us go ahead and actually place one of these trades. So listen closely because we're going to pull some of these afterwards, and then we actually are going to place a trade. So let's run through some of these. So the first one that we have off the bat is Uber. Uber currently, let's check what they're trading at right now. So Uber is trading at $40.09. So basically has not changed since the open with Uber. If you look at it, it's down 14% over the past month. They're losing a battle in court over employee rights. So what's everyone looking at? They're looking at, let's go bearish on this, but the option activity is actually bullish. Surprise, surprise. When everybody zigs, you zag. And so that is why we are actually putting out a call here on Uber. This is going to be a $42.50 call, so not anything crazy high off that current $40 mark, but we're looking at a resistance of $40.60 and a support of $39.15. So this stock is currently sitting exactly between those two. Our big lesson from last week was to remember that we have to wait for that support or resistance to actually go ahead and be broken. And like I said, currently, I guess Uber did this morning in pre-market, it came down to about 38. So you could even look at that as, hey, it's already hit bearish. I don't want to go ahead and take that, but it is coming back. And again, just because there's a lot of that negative news does not mean the stock's going to go down. The second one, actually one that really stood out to me here, was Macy. So if you look up ticker symbol M, I think people think Macy and they're like, probably not doing a whole lot. Macy's up 238% over the past year and 32% over just the past month. And I believe that they are up today. They're up another almost 2% today. I mean, this stock is just had an amazing, comeback. I wouldn't say that they've come all the way back, but look at it. Like if you look over the 5 years, they've got plenty of room too. I mean, this stock came out of the depths of like $5 a share, all the way back up to almost $23 a share. But that's not even touching their high of 2018, which is near $39 per share. So there still could be some runway here. Very interested with continuing to keep an eye on Macy's, especially after this booming, month that they've had. Look at this, just green candles that are just going on here. So it's Macy's. We're looking at a resistance of 2265. Let's see if we broke through that. Yes. So it is actually already broken through resistance today as well. So if you were looking for bullish indicators, you kind of have them. And the play that we're giving out here on Macy's from Shark is going to be a 9/17 $24 call. So we're giving ourselves a little bit more time here with some of these. I don't think I said it actually with Uber, but Uber is far out. That was a 12/17 call for $42.50. So there could be some initial downside news over the next few days, but we're saying, look at these from a month or 2 months out perspective. There could be some optionality here to trade. So with Macy's, a 9/17 call. Next, we're going to be rolling into Wish. Now, Wish has absolutely just been driven into the ground. It's down basically 34% this month. Let's take a look what it's trading at today. It is up about 3 cents on the day, so it has not moved a ton. But yeah, this stock's just absolutely been getting driven into the ground. It had lows today of 653, although it is coming back a little bit now. But the idea here was that this thing's going to keep going down. There's a lot of sentiment that this could see $4 per share. So looking at a 414.22 put. So this is saying, this isn't going to happen necessarily in the next week, but this is actually a leap here. It's elite put, so it's 4/14/2022, and this is looking at a support of $6.14. So it has not broken through it yet. So just something to keep an eye on is basically taking a far out approach to a put on Wish. All right, the next one that we're going to talk about is FedEx. FedEx is down about 12% over the past month, coming down from this kind of high pump that they had in April. The stock was trading at $266.08. Let's see what it is now at. It's currently sitting at $267.88, so up about $1 today. This is also going to be a put on FedEx. Now, the reason there's so many puts today is because there was an incredible amount of bearish options activity going into the end of next week. There's a lot of feeling of where this market is. I know we're always back and forth with, oh, we got the all-time highs, but what about my portfolio? How's my portfolio doing? There is just a lot of bearish option activity. So that's why we're trying to play some puts here. So with FedEx, we're looking at a 9/24/21 $220 put. That would be a resistance of $270.50 and a support of $263.74. So currently sitting at like 268. So we would want to see move downwards before taking this, because it's still just really inside of that nice tight range of being in between the resistance and the support. Next, we have Hexo. Now, for anyone who's unfamiliar with Hexo, they do cannabis small like packaging, I think, of like cannabis products. I'm not 100% sure. I'd have to take a second look. But essentially, we're looking at here a $3 call. So this stock, they're down 60% last 3 months. They're down from the stock that was double digit. There's just sentiment, if you look, that they bottomed out last week. So if you go and look at Hexo, it had one of those big drops. So I'm not sure if it was because of earnings. I'd have to look back on that, but yeah, this stock just crapped out like 30% last week. So it's down to $2.45. Yeah, consumer packaged goods for cannabis. And so there's just sentiment that this could pop back in. I mean, it's already doing it today. It's up 5.5% right now, and that breaks through. So support is at 265. Okay, so it's sitting right in between. It's at 245 right now. So 225 is resistance, 265 is support. So obviously, it's just much smaller stock, so we're just dealing with sense here. But we would look through this for this. If it can make a move back through that 265 range, I mean, just look at the 1 week even, or the 1 month on Hexo. You could see it break back through there and then can kind of continue this upward move back to that $3.15, where it was kind of sitting at for a bit before it just took off with this ledge. All right, one or two more that we're going to touch on. We're going to have Plug, everybody's favorite stock to hate. They were down about 12% this month. Plug is just breaking down on a lot of key levels. When you go back and look at the 1 year to 2 years, up about 3.6% today. So let's see if they're obviously not breaking through their support levels right here. So this is actually going to be a bearish play on Plug. These last three are all bearish plays. Or actually, no, Hexo was a call. Plug is going to be a bearish play. That's a put. So this is a 10/15/21 put with a resistance at 25.80, meaning it has broken through. No, it has not broken through. It's right in between its support and resistance. Also, I will try to I'll retweet a post that has a bunch of these in there after, and then we're also going to poll later. And then the last one for today is going to be Apple. So this is going to be a surprise call on Apple, who I think people have, really haven't been enjoying, but this is going to be a pretty short term. So it's going to be a 2 week put. It's going to be a 9/10 put. Just when you look at Apple, there's been a lot of bearish option activity, following up on, a lot of correct bullish options activity that was going on for the past few weeks. So those things make sense that they would move back and forth. I mean, they're up 16% over the last 3 months. The idea here is that support is sitting right around $146 and like 70-ish cents. Again, support's always a range, so don't take that too literally when it's like on a cent. You want to always give some berth. But yeah, so Apple's at 148.61, so it's up a little bit today. But basically, if it was to break back down through that support of like 146, there's sentiment that this could see a falling, because when you look at this from a technical perspective, the point of control is much lower, down to like $136. So that basically means that a ton of people are sitting on profit with Apple right now. So if it was to break back down through, let's say, the 14th day, the 21 day moving averages, which it's basically sitting right on top of right now, it could fall conceivably down towards that mid 130s range as people take profits saying, hey, it's breaking through these. I don't want to, miss out on this profit that I have. So that's going to be all the plays that we're laying out for today. Like I said, I will share stuff and put some more stuff out. What's that up, Evan?
I just want to hop in on the end of this stuff and this kind of reiterate like my favorite part of this segment now is that we've been able to add this real trade to it and kind of allow us on Friday, which I really, really encourage if you guys like this part to come in and join us on Friday at 4 p.m. Eastern. We're going to kind of go back through these plays. And me and Gav, we really want this to be an educational thing. A lot of people love investing in options and trading options, and a lot of newer people. And a lot of the times, you lose a lot of money at the start, and it's really difficult to get going. So we kind of want to be that person that can make the mistakes and you guys can learn from. So I really encourage you guys to come in on Friday and just hear how this, whatever option we end up picking goes. And kind of, we're not just going to talk about what did what. We want to talk about the underlying lessons we took from this. We really want to turn this educational. So that's like the real big thing from this that I think that is super powerful. So just make sure you're back here on Friday so you guys can hear our takeaways if you're trying to learn. And I think that it's super powerful if you can learn from the mistakes of others. That will save you a lot of money in the long term. Really, really difficult to do. Hopefully our goal with this is to turn this into a situation where you can learn a little bit about options through us and not have to make the same mistakes. So shout out to Bullish Rippers for allowing that to happen. Tweet pinned up at the top of the space. I'm going to pass it back to Gav. That was just really what I wanted to add there.
The only thing that I want to mention, and I'm going to turn it back over to you to do the earnings and stuff real quick because it's almost 10, so we might be running a little bit over time, but that's fine, is that I looked up CryptoPunk 7610 that Visa bought, and it last traded for over 21 ETH, meaning that they paid around $65,000 or more for that NFT this morning. So just a note on that. But we can turn it back over to you.
Wait, how much ETH did you say?
It's like almost 22 ETH.
Okay, so I was seeing a number thrown around like 150,000. So I have no idea. So maybe that was like whatever, but
they could have paid more for it. I just looked up CryptoPunk number 7610, which is the one that you had written. It doesn't look like they have the most recent trade cataloged in here. I don't even see it. I see 5 days ago it traded for 22 ETH. Mm-hmm. So we'll see.
Interesting. A lot of this stuff does happen like in private areas, and maybe a transaction that big could be that. Who knows? We'll see going forward. But I'll get into the earnings and some of the other stuff for this week. So we kind of want to keep this as a segment, just like earnings, some macro events, and some dividends that are happening this week. There's a couple, we're still slowly a little bit in earnings season. We're getting to the end of it, but we're still in it a tiny bit. So this week, the earnings I'll be covering is Peloton and Salesforce. And then JD actually reported this morning, so I have a quick summary of what happened there. So I'll start with what actually reported this morning already. So JD, they reported GAAP EPS of 8 cents, and that missed expectations of 21 cents. They reported a revenue of $39.3 billion. That beat expectations of right around $38.2 billion. They reported annual active customer accounts, so people using the service, of 531.9 million, and that number was up 27.4% year over year. Cash and cash equivalents ended the quarter at $27.6 billion, and they gave no forward guidance to see what's going to happen next quarter. So we kind of all know what's happened with these China stocks recently, and JD is no exception with that. On the year, it's down around 15%. No, sorry, over the last 12 months, it's down about 15%. Over the last 3 months, it's down around the same. The numbers look pretty solid, but there's a lot more to unpack when you're talking about these type of stocks, and there's a lot more to look into just past the numbers. So I would encourage you to take the macro look at China whenever you're investing in the stock there. But there's some stuff. But yeah, JD went this morning. You can look at those numbers. They're fully out. So earnings for this upcoming week. We got Salesforce, which I believe reports either Wednesday before or after the market's closed. I'm going to go out on a limb and say after the market's closed. Whatever. It could be before, but it's one of those. Wall Street is expecting EPS of 93 cents. That's down from $1.44 in Q2 2020. They're expecting revenue of $6.25 billion. That is up from $5.15 billion in Q2 of 2020, so growing revenue by more than $1 billion. The company expected, they gave forward guidance where they expected revenue to come in right between 6.22 and 6.23 billion. So the analysts are expecting a little bit more on what the company is itself. And same thing with EPS. The company expected to come in at between 90 cents and 92 cents for the quarter. One thing that I'll be looking for on the call is really any commentary around Salesforce finally closing its acquisition of Slack. I want to see any integrations, anything like that, any free talking. This story has been talked about and built out a lot. So, we all know that Salesforce acquired Slack, but closing it, changes some things and possibly can lead to some commentary on the conference call from Salesforce on that. So I will definitely be watching that. Talk more about how it's going, integration, stuff like that. And then the final earnings I want to talk about here is Peloton, which they report, I believe, Thursday after the markets close, if I'm not wrong. Wall Street is expecting EPS of negative 44 cents, and that compares to 30 cents positive in the same quarter last year. They did take a $165 million negative impact during the quarter due to the treadmill safety issues and the recalls. So that's really what's bringing that number down significantly to a negative number. But yeah, Wall Street is expecting revenue of about $921 million. That's up 52% year over year. Peloton itself guided for revenues of $915 million during the quarter. So analysts are expecting a little higher than the company itself, but still watch for where those numbers come in. I will be looking for an update on the status of those recalled treadmills, see how it does, see how the recalls are doing, see if any brand effects, sales, everything like that, and kind of along with a sales number. Last quarter, they ended with a pretty decent backlog, the bike and the treadmill and everything like that. I know a lot of people in here might have some firsthand experience with this, but we all heard about this, how it was taking months to get your Peloton bikes or months or whatever. So with the recall, I just want to see how the backlog is doing, and hopefully they're not completely through it, having a demand problem. But just something I'm watching for that specifically. So next, I'm going to move over to ex-dividends for this week for all you dividend fans. Not too many. I would expect this to start to pick up soon as we just kind of got through earnings season. Companies tend to do their ex-dividend and record date not too far after they declare their dividend. So we'll see if this starts to pick up in the coming weeks. But today we have Johnson & Johnson, ticker J&J, going ex-div. Wednesday, I have Applied Materials, ticker AMAT, and then S&P Global, ticker SPGI. Thursday, I got Analog Devices, ticker ADI, and Nextera, ticker NEE. And then finally, on Friday, I have Nike, ticker NKE. All right, so with that, I'm going to pass it along to Nick to give us a minute or two on a lot of the macro events that are happening this next week.
Yeah, we just got existing home sales. That was a beat. The month over month was a beat. And the market services PMI flash, it was a miss on all three. And so manufacturing PMI was 61.2, estimate was 62. Services PMI was 55.2, looking for 59.2. Then the composite 55.4. We needed around 59. So again, I think the Delta variant is weighing heavily on this. So then tomorrow we get new home sales. Wednesday, we get durable goods. Thursday is the big day because we have initial jobless claims, continuing jobless claims, and then the second quarter GDP revisions. And then Friday, we get the income. So personal income, consumer, core PCE, trading goods, the Michigan Consumer Sentiment Index, and then the Jackson Hole event. So I think with all of these, I think the Fed is really going to be watching them closely. We'll just have to see what the Jackson Hole event brings. But as you probably already know, it is fully virtual, so I expect taper talk not happening.
Okay. Thank you, Nick. And looks like just on time. So Gurgavin's up here. We got Peter's up here now. So we're going to roll into that segment. What's going on, Peter?
Morning, guys. How's everybody today?
Living the dream. Appreciate you joining us. How's the floor looking?
You know what? I'm actually not on the floor this morning. I got some things going on. I'm at home, but, it's another fascinating Monday. There's just so much on the table. I love seeing this amazing crew here. I'm honored to be in the group. Look, It's going to be a fascinating week. Obviously, the Jackson Hole thing is a big deal. FDA approval for Pfizer is a big deal. The price action of last week is a big deal. The reopening story is a big deal. This deviant, the Delta variant, I'm calling it the deviant, is obviously a problem. But the market just seems to be shrugging off so much of it that the resilience of this market is daunting.
Absolutely amazing to see. Gurgavin, how's your morning going? Looks like you're up almost $100,000 today, huh?
So far, so good. I made three trades. One, I lost 10%. Second one, I'm up 59%. Third one, I'm down 2%. So just trading Pfizer and Moderna in the morning.
How are you trading them? What's your kind of style then?
Just call both of them right now.
Okay, you're just getting in and out?
Yeah. So right now, I have Pfizer 50 calls, August 27, the weekly ones. And I also traded some Moderna 400 calls. Two
Okay.
times. The first one I got burned for 10%. The second one I'm down 2%, but I expect it to bounce back in the next couple of minutes.
Very interesting. Peter, what do you see for some more of these, like maybe, vaccine or health or reopening plays? Like what do you see in that area?
You know what, guys? I always beat the door on this one, but I think everyone's really got to look. If you're an investor in this market, just look out the long term. Markets go up, and I think things are going to be fine. But from a trading point of view, your only defense against this wild moves is technical analysis. Whether we're looking at meme stocks, whether we're looking at Pfizer, Moderna, there are stocks that are moving, and there's kind of no rhyme or reason to the way they are moving, except that there are people swinging big sticks around here. And so, trying to make a decision based on anything else than technical analysis from a day trading point of view, I think is crazy. And there's so many opportunities within the market, within technical analysis, to really be just slaying this market, guys. If you're patient, if you're consistent, if you learn technical analysis every single day, this volatility, whether it's overall market performance, whether it's the spies, whether it's the meme names, whether it's the drug names, whether it's the reopening plays versus the shelter in place names, whether it's vaccine volatility and virus, whatever it is, technical analysis puts the probability in your court that you're going to win more times than loss. And using risk management, and I pound the pavement on this a lot because this is a generational time in the market where the movement, the vacuums on the way up and way down, the enthusiasm, the appetite. You're seeing stocks go up and down. We saw it with Alibaba last week, down 6 days in a row. And I know everyone loves to look at the headlines and the China story and why it is down the way it was. But at 160, there was an incredible opportunity when the technicals set up to actually take a shot after 6 days down and buy that stock. And on Friday, pre-market, it had already run up. From Thursday night, it went down to 159.50. On Friday morning, it was already up at 164. We had gotten into a trade. It was just extraordinary, and it rallied back up to 166. There was a 6-point technical move after a 6-down day move in Alibaba. I don't care what the news is. I virtually don't care what the stock is. But when the technicals set up for a trade, it is incredible. By the end of the day, if you hadn't taken your profits, that would have been turning a winning trade into a losing trade because it ended up closing at $157. So these moves are wild. These moves are volatile and they're dangerous. And if you get into a trade and don't put in a stop order, you're nuts. If you get into a trade and you're up 10, 20% and you don't take a profit and put in a trailing stop, you're nuts. Okay? If you're an investor, you got to be in it for the long term, and that's a beautiful thing. But from a trading point of view, a short-term swing trade, option trade, day trade, trend trade, base trade, there are extraordinary trades that set up intraday, all day, nonstop. Otherwise, if you don't follow technicals, you're throwing a dart at a board and you're going to get devastated. If you don't take profits on a trade and put stop orders in, you're nuts. And I cannot beat the pavement enough on that, guys. You can learn technical analysis from whoever you want. It is something that I do, but it's something, the more I do it, the more I feel strongly about it because I'm watching people come to me and go, you know what, I got into this trade because of the hype, because of the this, because of the that. You know, there was the news, there was the earnings. The only thing that works for me on a trading point of view right now is price action. We saw the last couple of weeks, stocks come out, blow away earnings, blow away guidance, and trade straight down. Right? We saw stocks that come out over the China news, trade down 6 days in a row and rally back for 3 hours. The opportunities are here, guys, to make money, to really, really learn this day trading game, right? If that's what you're doing. If you're an investor, you know, I hope you're in there for the long haul. I want you to invest in stocks, not stuff. It's the greatest thing ever. But from a trading point of view, you need technical analysis. Fundamental analysis is not going to do it the way this market is moving. There is no playbook for this, guys. These stocks are moving wildly, day in, day out, hour by hour.
Gurgavin, let me bounce that off of you. How are you protecting yourself from loss or using stop losses? And also, how are you picking strike dates and prices and things like that?
On the volume, like whenever I take a long position, I usually like call and get some put to hedge my risk, and I always trade with a stop loss. You never see me trade without the stop loss. I prefer trailing ones because even if I walk away, they adjust if the stock goes up, right?
Mm-hmm. How about picking your dates and prices and everything? Like, what are you trading right now on
No,
Pfizer?
right now, Pfizer is August 27, 50 strike. They had the most volume, so I follow the flow most of the
So
times.
I mean, I guess it's in the money now, but you were trading like right on the money, basically.
Yeah, basically.
Why is that versus going, maybe further out of the money?
So I didn't plan to hold them for the week, right? I will probably be out before 10:30. So I might get further strikes if the flow is still bullish and I still see people pouring in money into premium. I might buy more further out. But this, looking at the flow and the possibility of Pfizer getting the approval today, this was I thought 50 would be the best strike to buy.
Got it, got it. Dan Klein, you're still up here. Any thoughts on what we're covering right now, what we've been chatting about, with some more of the fast moving and fast paced and some of the stuff within this Pfizer Moderna area?
Yeah, absolutely. That is the strongest case for how to day trade I've ever heard, but it's just not what I do. So the reality is, I'm buying and holding long term. I am buying shares of businesses. So again, follow guys like this and listen to them if that's what you want to do, because they're right. But for me, I'll take that type of excitement betting on sporting events. Probably like with the market, it's good companies holding them for a long term. I just don't want to have to pay that much attention on a day to day basis.
I'd
What do
love
you,
to hop in here with a question, Gav, if I can. Just kind of hopping off both of those, and Gavin, Peter, Daniel, I'd love for all of you guys to hop in on this one. Peter, you've talked a lot about how much you love and technical analysis is everything, and kind of we've had this discussion where I've said something like it's super important for traders, but maybe less for long-term investors. It's still important, but maybe a little bit less. So I would love to kind of give you the floor of why technical analysis is super important for long-term investors, and then maybe Daniel, how do you use technical analysis in your everyday as a long-term investor, kind of both ends of it. But I'd love to get your thoughts first, Peter.
Sure, I would love to answer it. It's good to be on the call with Daniel. Look, entry. I've been doing this a long time, and the kind of trading I've done over the years. I used to work for Cowen and Company and a number of risk arb companies, and large institutions taking long-term positions in stocks. And the whole key to a long-term investment, in my opinion, right, and everyone's got their own game here, is entry point, right? It's it's a matter of where you get into the stock, where you find value. Now, look, if you're swinging a big stick and you're looking at the long term and whatnot, whether you get in Alibaba at 160, 158, 157, 162, it may not be that important to you if you're looking for the long-term game. And as Daniel just described, he's looking at buying shares in a company that he has a lot of faith and interest in. But at any given time in the market, the way it is, even if you're looking long-term, technical analysis is all about entry point. So it becomes a viable and relevant thing to us if you're day trading, because if you get into if you're looking for a short-term play and you're trying to make 50 cents, $1, $2 on a quick trade and you do it over, the 8 hours of your day and you do it 10 times a day and try to make money, entry point is key because you're seeing that these stocks make wild, wild moves. So on different trades, there are about 5 different trades, me at Wall Street Global Trading Academy, that we try and teach, which are super simple for the day trader, whether it's a trend trade, far from moving average trade, double top, double bottom. There's certain indicators that help us determine what's the best entry point. When a stock is overbought or oversold, and where the entry point is on the buy side or on the short side. And so from a short-term trader point of view, if you get in, if you don't get in at the right entry point, you're always chasing that average for you. And so therefore your profitability is going to be less. Obviously, from a long-term trading point of view, look, in my opinion, is in investing and in trading, entry point on the long side or the short side is the most important thing, right? And so technical analysis puts the probability in your favor that that if you're going long the stock, that the stock has stopped going down, is going to reverse, and on the upside, it's that it's overbought, and it's time to put out a little short in it. That's all.
Dan, I'd love to throw the question to you, just like as that long-term investor, do you use technical analysis at all, or like is there anything specific you look for in the frame of a long-term investor?
So no, like not in the traditional sense. I mean, obviously, when I look at a company, I look at what the roadmap is and how they're going to get there. And on a quarterly basis, I look at, did they sort of move forward, and if they didn't, what went wrong, and how are they going to course correct? As it was just mentioned there, it's just not that relevant if you're going to own something for a decade, whether you got in at like 130 or 135. Or someone just asked me via private message, like, boy, Apple, Google, and Amazon are all really expensive. And it's like, well, I'd argue you would have said that those were all really expensive 5 years ago, and you'd probably be fine. My biggest holding is Microsoft. Do I add any Microsoft? No. But there was a news story last week that them slightly raising Windows prices is going to produce, not Windows prices, Office prices, is going to produce $5 billion in annual incremental revenue, which is kind of an irrelevant number for them, but it's still $5 billion for doing something that nobody's canceling Office because the price went up 3% or whatever it is. So, do I know how some stocks are going to perform in the short term? Sure. Like when you've done this long enough, like, I don't know, for like 2 years, every time Sears reported, the stock went up. And I wrote a story on it back when I was at Motley Fool, and I could have invested in that. But to me, that's just kind of not the fun. Like, I mean, it's just not what we do. And that said, if you're going to do it, make sure you're listening to guys like these guys who know what they're doing, because there are a lot of really bad systems out there, and very few people who are, as genuine as what I'm hearing on this call.
Daniel, it's good to meet you. Do you trade around your positions? Look, you're talking about being in a stock long-term, 5-10 years down, and I totally get that your entry point at that point really doesn't matter. But if you have a good profit in the stock, do you trade around it? I mean, that's where I think it would be fun to bring technicals into your model. Is you're in a stock, you're up 60-70% the way this year has been, right? And you may look at it seems a little bit overbought, and maybe take some profits in it, go it more into cash in that long-term position, and then get back in if the stock takes a dip.
So I don't, but that doesn't mean that other people on our team don't. There's definitely people using options and doing some of that. For me, I've always gone by the rule that because I'm hosting a 3-time-a-week, live show that a lot of people are listening to, I'm very transparent with what I'm doing. So I don't make a lot of trades, because not that I can manipulate stock where I work now, but I certainly, could have where I used to work. So for me, I sort of abide by the rules I had to go by at Motley Fool, where I couldn't buy something if I was going to talk about it in the next 3 business days or had talked about it in the 3 previous. But that's more a personal, like, ethics code and maybe laziness too. But, my horizon is I'm 47 years old. When I'm 70, I want to do this from, I don't know, an island somewhere, or maybe half my time on a cruise ship or something like that. So I'm really looking at a really long horizon. I don't worry too much about the day to day, but again, there are ways to do it. And I agree. Like if you know a company, there are opportunities. It just kind of hasn't been right for me.
Gotcha. I get it. Look, we all do. We all have our acts in this business, guys. And you're seeing all the people who are on this call. You know, we all have our relevance. We all have the game, right? There are people who are going to be invested in this company for the long term and listen to people like Daniel. And there are people like me who, you know, I trade on the floor for hedge funds. But what I've chosen to do since the pandemic is try and spread the love of technical analysis because, look, we've got this new generation of traders coming into the market. Look who's on this call. There's a number of people who are hosting this call who are, you know, younger than 25, and to have the knowledge they have and to be putting this community together is extraordinary for people like me, right? I've been 55 for 6 years, and I've been in this business since I was in my low 20s. So, you know, for me, I've been here a long time, and what I felt the most relevant thing to do now with all these 40 million plus new people in the market who don't have the education to trade this, people who got in March 2020, and then every schnook who hit a buy button suddenly who made a whole bunch of money thought that they were rock stars. And then we have the Wall Street bets and the meme generation coming along. And I see in the social media that I do that there are people who still sit out there and think that when AMC goes from 20 to 40 to 62 and 75, that this thing is going to the moon and it's 100, and they're day trading it, and they immediately the next morning they issue a secondary, it goes down to 40 and hasn't seen that price for the last month, and they're spending really valuable time trying to get back to even. So I've taken it upon myself in my world right now to really try and educate people to the fact that this is not a get rich quick scheme. You know, there are people like Daniel and God love them. It's great. Long-term investors are so important in this market, but there are a generation of people trading this market, using the internet as their financial robotic advisor, and the Wall Street bets guys, and the to the moon guys, and the diamond hand guys. And my fear is that people are going to listen to those people, turn winning trades into losing trades, you know, mortgage their grandmother's house, and end up in, you know, out on a street corner smoking Lucky Strikes. So, you know, it's whatever we can do for people who've been in here a while, as Daniel has, is to educate you guys to the best of our ability to try and become financially independent, to make some money. This is a pivotal time in the market.
So AMC isn't going to do $1 million a share, Peter?
I'm sorry, say it again, Gore.
So AMC isn't going to do $1 million a share?
I can't hear you.
He's saying, so you're saying AMC is not going to go to $1 million a share?
No, it's not. I don't believe so, but you know what? Maybe it will. But the bottom line is, you know what? I don't have an opinion. Daniel just described it, guys. I've never owned a share of stock in my life, and I've been doing this for 35 years. I've chosen that since I make a good enough living trading with other people's money, and the conflict of interest of me and my regulations not being in a stock for 30 days that I'm in for a customer, I trade the full S&P package basket every day, 378 stocks. So I do not invest in the market. I'm here to try and analyze the market. You know what? AMC may go to 1,000, Gore. It's absolutely possible. But on its way there, nobody got broke taking a profit. There'll be a new opportunity to get it tomorrow. I don't mind. Look, I'll tell you a fun, quick story. There was a guy on the floor of the exchange in the 90s who got into Yahoo in the beginning, right? Yahoo came out at 3, went to 400, and right back down to 3. And the day that it actually fell out of bed and decimated everyone's portfolio, there was one little guy named Frank Murphy who sat there, sort of a curmudgeon, and he would just sort of wring his hands and smile. And I went up to him and said, Frank, everyone down here is just decimated. They watched it go to 480. They thought it was going to 1,000, and now their portfolio is wiped out. Why are you smiling? He said, Pete, I bought it at 20. I sold it at 40. I bought it at 80. I sold it at 120. I bought it at 200. I sold it at 300. By the time it got to 480, I'd made $20 million. I didn't give a shit, excuse my language, that it went back down to 3. That's the whole premise of what I try to share with people is there are going to be new opportunities every day. As long as you stay profitable on a daily day basis, hit singles and doubles, and your portfolio is vibrant tomorrow morning, you can start fresh, even if you buy it higher and it's going to go higher. So I hope all those stocks go to 1,000. I just hate for people to sit around spending months trying to get back to even. And there are people who bought AMC at 64, somebody bought GameStop at 483. That's real money, right?
And someone bought Nicola at 93 too.
Right? Somebody bought Labu at 180. Where are they now, guys? The bottom line is somebody decided that on the first day Alibaba started to go down, it was a good opportunity. On day 2, an even better opportunity. On day 5, their account got blown up. On day 6, they had no cash left to even buy it when it was done going down. That's what I'm talking about. That's the fun part of this game.
I feel like just one comment with that you were saying that like when you're up massive on a position, if you're a long-term investor, trader, whatever, like it is impossible to go broke taking a big profit. You know, I've had this trouble with a lot of my friends where they're like, I tell them to sell or whatever, and then the next week it's up 2x, and they're like, damn it, whatever, I didn't sell. And then the week after that, it's at 20% of what it was. So, like, if you're at 5x, 10x on a position and you don't at least take out your initial investment, so you're just playing with the house's money, you are making a mistake, I believe.
Yeah, let me jump in on that. So sure, if you're buying shitty companies like AMC, like fundamentally the movie business is dead. If you'd taken profits on Amazon, you'd cost yourself a lot of money. So I really think you need to differentiate from where you're trading and where you're investing. And like, so let's say you're a Starbucks shareholder and your thesis is, okay, they're going to open 10,000 more stores in China and they're gonna increase their business 20% in the US with premium, and their Nestle partnership is gonna do X billion dollars. If you think those things can still happen just because you're up, now there is an exception. I know some people that owned GameStop pre the whole meme thing because it has a strong balance sheet. They have short term leases. They believed in the management and they thought, okay, this is a company where the stock could be 2 or 3 times where it is. Well, even as a long term investor, when the stock blows up and it hits that 2 or 3 times, well, you've achieved your thesis and sell. So if Starbucks hits all those numbers and then doesn't have any new, growth mechanisms, that would be a time I would sell out. So if you own a good company, it is theoretically possible for a thesis to play out. That's much more likely in retail than it is like biotech or emerging technology. But again, remember, like if you're buying, Wish is an awful company. Buy anything from them, and it is a miserable experience. So there, you're making a sports bet based on what you think and that's when you use the technicals and you get out. You don't have to get out when you own Microsoft shares.
I definitely agree that there's certain stocks where like that I haven't done this with Apple and I'm up pretty big on it, but I did it with Tesla. I believe in both of them extremely, with high conviction. Tesla is just a little bit more of that super high growth name in there, where Apple is a little bit more of that, blue chip player in there. So I definitely agree with that overall sentiment. There's certain stocks with a long term thesis that you don't necessarily have to take the profit on, but I think that there's certain stocks, there's certain whatever that it's okay to, and I think that either way, a big thing in investing is you have to really drive home and really make big gains on your winners. You have to beat them down to beat them to the dust. But I think that also, like, if you in your situation you need to take a profit, you may give up some opportunity costs, but you're not going to go broke taking a profit overall. I agree completely. If you want to become a long-term investor and make super crazy amounts of money in this, you got to press your winners. You got to stay in there. But just don't be afraid to take that profit if your situation calls for it.
Yeah, let me jump in. Like, so we're perfectly okay as long-term investors. Like, if you own a stock and you sell some because you want to put a down payment on a house or you've wanted to go on that dream vacation, that's why you're investing. So, we usually tell people sell the stuff you have the least conviction in. So if you're up, 9,000% on Tesla and you don't believe that has the most growth potential, well, sell some Tesla. I don't think it's ever wrong to sell to fund the types of purchases that are why you invested in the first place. Like, I'm sitting here in my vacation home and I sold real estate to buy it, not stock. But if I had to sell stock to buy, a dream place I wanted to be, well, that's why we're investing in the first place. It's not like a scorecard. So when we die, we can say we won.
I gotta say, just jump in here quickly and we can keep it moving or whatever. I have loved this conversation that we've had with Daniel and Peter. Kind of, I feel like the combination of you guys together is so perfect. I love the really expert trader and the really expert long term investor coming in. I think we've had some really awesome conversations. Definitely one of the most valuable ones we've had so far. So I've loved this. I really appreciate you guys. I'll throw this to everyone in the audience. Just check out all the speakers we have up here. We've had such a great conversation. On my screen, Peter's a listener right now. Hopefully we can get him back up here. But just check out all these speakers. This conversation has been amazing, and there's so much more from these people on their personal pages that you guys just got to check them out. But Gav, pass it back to you.
Yeah, what's up, Nick?
I was just going to say, crossing the wires on Tesla, there's a report out of Inside Eves that Tesla Model Y production in Shanghai reaches 1,000 a day. Also want to remind everybody the record highs on the S&P and the Dow, or the S&P and NASDAQ are like slow, like really close. S&P all-time high we need to get to a new record high is 4480. And then the NASDAQ, I believe, is... I'm pulling up right now. NASDAQ is like really close too. NASDAQ is 14,896. So we're near those levels. The Dow, I don't know about the Dow, but just wanted to throw those two things out there.
Gavin, I saw you posted. Did you say S&P new all-time high?
Yeah, it does. Like 5 minutes ago.
Okay, looking good. I'm taking a look real quick at the FinViz heat map. For those that haven't checked that out, that gives you just really nice overall look at the market and large cap in green. So Nvidia's up 3.5%, Tesla's up almost 3%, Amazon 1.48, Google 1.25, Facebook 1%. Couple of areas that are doing really good overall. So financial services doing amazing right now. We got PayPal up 1.6%. Bank of America, JPM, MasterCard, all doing really good. And then also capital markets, same. So Goldman Sachs, Morgan Stanley, Schwab. And then the other one that's standing out to me right now is energy. So energy, you got Exxon, which is XOM, is up about 3.5%, as well as Chevron's up. And then ConocoPhillips and all the other ones down here. Everything in energy is up about anywhere between 2.5% to about 5% today. So looking pretty good there. And then obviously, it's nice to see Tesla coming off of that Tesla AI day doing this. But I'm consistently looking at NVIDIA. I saw also, if anybody didn't see this, on Jake Wojcicki's page. So he works for TrendSpider, so it's at TrendSpider J. He did a really good charting of NVIDIA this past week. Just showed that basically, I'm just going to pull it up inside of TrendSpider real quick, but basically we were looking at it breaking through some key levels, and then today it has. So it was following really nicely on I believe the 14-day moving average is one that I like to use a lot, as well as the 21-day, and also the 50-day, I think. Yeah, so it basically came through the 50-day moving average right at $194. And then just look at the respect it has for the 50-day moving average, where it pops right up from 195 all the way up to that first candle to 208, and now the second candle up to 215. Just want to confirm, this is, I think, an all-time high for NVIDIA. There's no trading action. Yeah, no price trading action at this point. So there was actually a lot of buying if you look at it. So TrendSpider lets you see by volume. So you can look and see at $202, basically all the way up to 204. There was a ton of buying pressure. There was 316 million in looks like shares bought. And then they also had some nice buying pressure up at 205. So it looks like this could continue as it continues to respect the moving averages, which it's taken quite a leap on. So I'm still watching it. Everyone, we were talking about it on Friday, and I was like, oh, if it comes back down to this 185, 190 range, I'd be very comfortable taking it because it'd be bouncing off the 50 again. But I don't know how soon it's going to get there. Peter, you're back up with us. What's going on? Or he might need a minute. I think he texted
on my
me.
screen, I don't see him up, but it's been a little bit glitchy for me with that.
Yeah, it says he's a listener on mine.
Okay, he texted me he's running to his car, so no worries.
No worries. Yeah, while we're trying to get him or whatever, I got one or two things in front of me quickly. I'm looking at the stocks that hit all-time highs and 1 month lows so far today. It's early. This list builds out throughout the day. This is from TradingView. So we're talking about a little bit competitors. I love all these trading services and everything like that. Just
Yeah,
bringing in
I
a lot
use
of great
both.
stuff. Yeah, me too. And we're in the situation where we can. But so a couple stocks that hit all-time highs so far today. We have Google, Nvidia, Adobe, Comcast, Intuit, Thermo Fisher, Accenture, BlackRock, ServiceNow. We got a couple big companies up here. Chipotle, I know a lot of people love. Actually, I believe Daniel spoke about it quickly. Kroger at all-time highs as well. Ulta we talked about quickly. So there's a couple big names up there. And I'm going to switch over to the 1 month low list. So this is, if you're looking for some ideas, these are just stocks that are down a good amount at least, and maybe could be the start for your research, just the start. Don't just go in and buy from this list. Use this as a place to start getting research. But couple names at the top of the 1 month loser list. Of course, we got Alibaba. I'm sure a bunch of the China stocks are still in here, but I'm seeing Uber, General Motors, Coupang, CPNG, Peloton, Domino's, Lyft, a couple other names like that in the 1 month losers category.
Nice. Looks like 26 out of 30 stocks in the Dow are in the green today, right now. So definitely some big winners. How about Google though? Continuing that run up?
So I was looking at Google stock the other day, and I was talking to my friends about it. One of my friends over the weekend was like, "What stock should I go and buy?" And there's a couple stocks I kind of just scroll through. And truthfully, Google as a company is one of the names that, like, if there is a major pullback, like just my personal investing style, my personal opinion, that is a name I would want to get in. But I was just looking at the chart, and it just does not pull back. It just doesn't pull back. There's no entry point. So I'm struggling a little bit with that. Yeah, I bought a little bit in the past, just all-time highs, just because it had to, and I'm up a decent percentage on that. But Google is just an extremely interesting one that just all-time highs, all-time highs, all-time highs. It's fascinating to watch.
Yeah, I mean, from a technical analysis perspective on Google, I would watch the 50-day moving average. So the 50-day moving average is currently, I mean, it's not that close to it. It's at 26.49. So it has definitely popped above it. But if you look, it hasn't, it's respected the 50-day moving average for a while now. I mean, it bounced off of it back in March, and then ever since then has not even touched it. It's just consistently, every time it's come close, bounced upward. So I would be on the watch out for that. Also, there is buying pressure up here. It looks like there's a couple volume ledges up in the high 2700s. So it could be interesting to see. It's popped up again into unknown range. When you're testing new all-time highs, you have very little data with which to understand there. Also, you can look at things like RSI. The RSI is not terrible right now. It popped a little bit, maybe too high, back towards 78 in June 26th. But I'm looking at it today, and it's at the high range of the 70s. And for those that are familiar with RSI, usually once you start getting into those mid to high 70s, that's kind of where you sometimes will be looking at a pullback. But it could be interesting to see it continue going. I mean, it had a nice dip on the 2018 on August 18th, which was just 5 days ago in that RSI. So we could see another one of those soon. So I'm just interested in watching. Obviously, the small cap sell-off has been just freaking exhausting. So I'd like to see some pullback there. And then it looks like crypto is also taking a move right now for anybody that's holding crypto. Sharp downwards move of about
I just got a notification as well
1%.
that Bitcoin futures moved below the 50K level. So whatever that really matters, it did happen though.
Yeah, well, Bitcoin's below 50. So would make sense that they're moving with it. Will be interesting to see if it can hold that 50K level, pretty key level for many, but a lot saying that it could cruise through there until like 54, maybe a little bit higher. Gurgavin, what else is going on? Have you broken 100K today?
No, I'm back to 94.
Okay, okay. What's the next steps for you? Are you going to be done trading these? You said by like 10:40, right? Or
Yeah,
10:50?
I sold my Pfizer mRNA. I have one left. So I'm planning to sell my UDAO. So last week I started a big position in UDAO and Palantir with SPY. So I'm planning to sell my UDAO and move that back into SPY. I see this hitting all-time high again before Friday. So
Okay, interesting. So just kind of moving in and out of the position.
yeah, so right now I am levered 3x and 80% of that is SPY, 92 is UDAO. So pretty big into big indexes right now.
Wait, is that
And
UDAL you said?
Yeah, UDAO is triple leverage DAO.
Okay,
So
got it.
yeah, so every 1% DAO moves, this goes up 3%, and vice versa too on downside.
Okay, and you're trading options on that?
No. Shares directly, and that's all covered cost you to hedge to get the premium, and then bought no Palantir with that. Sold some puts again, Feb 18 puts, got 106K in premium, bought I think 3,000 more Palantir. That's up 4%. So we'll sell that too and cover the puts in some time if the Palantir starts to go up a bit more.
Yeah, speaking of Palantir, maybe you could speak to this for a second, as I am trying to get Peter back up here, but you took a massive, you sold puts, was it? On
Yeah, so I sold 1,000 Feb 18 $18 strike puts. So right now they are up 10,000 and almost 7%. Let me share that. Here we go. Let me find them.
Yeah, I saw that was a huge position and, paying off already today, but we'll see. So
Yeah,
when you, when,
I found out. Here we go.
mhm. Okay, so everybody can see that in the nest. There's a bunch of posts that are pinned with different trades, different information going on up there. We'll probably run just a few more minutes, hang out. We're going to get Peter back up here. Going to chat on just some stuff that's going on this week. Real quick, just want to take a second if you're chilling in the audience. I do want to see if I can find this post, but essentially, if you have not already checked out FinTwit Conference, if you're up here and you're listening to people in this room and you're like, I wonder if I could meet these people in real life, something along those lines. There is a way that you can do that. I'm working with Jonah Lupton and a few others to put on what we're calling FinTwit Conference 2021. We're less than 2 months out. It's going to be October, really the 8th, 9th, and 10th, but mostly focused on the 9th, which is the Saturday of Columbus Day weekend. We already have tickets up. We are selling hotel rooms fast. We have a massive block on hotel rooms, meaning that you can get them for about a third of the price. So if you're trying to get down to Orlando, to Florida, right as it's getting real nice there in October, meet a bunch of people. We have a bunch of sponsors that are coming down, so you're going to have opportunity for drinks, parties. We're selling tickets and everything. So I just want to continue to reiterate that I would love to see more people there. It would be an amazing experience. We're not making any money from that event or anything like that. Just an opportunity to get together with the community. So I'll be down there. Hopefully Evan will be down there. That would be great. And we got to peer pressure him into coming. But if more of y'all come, I think maybe he'll come with us. All right, Evan, do you want to move into some wrap up? Anything else you want to cover? Any stocks you want to hit on?
Yeah, so just as we were talking, one or two more stories crossing in front of my eyes. One thing, not a public stock, but for all you Bitcoin people, I know you'll love this. Substack, the newsletter service, is actually said today they're going to be accepting Bitcoin as payment. So that's interesting. I'll be watching that. I think it's cool. I use Substack a little bit, and I know a lot of people in this space do, so I'm sure there will be some very, very happy people around that. One more thing I'm just looking at is a bunch of analysts came out with ratings on Robinhood this morning, like a bunch of them. I want to take this opportunity to just talk about my thoughts around analysts and just like there can be 20, 30 people talking about a stock, analysts giving ratings on the stock, and the truth is the majority of them don't really matter. I would encourage you with analyst ratings to try and find 1, 2, 3 analysts per stock or per sector that you have a history of getting things right, that you can trust, that you know what they're saying and you know they understand the stock and you like how they speak about it. And a lot of times you can look back through history about their calls and how they've done. I'd really encourage you to just try and find 1 to 2 of the best analysts per stock or per sector. And from there, just kind of really only listen to those people, hear the other stories if there's something big pointed out, but really lean on the coverage of analysts that understand the stock, get it right, and give good information.
Absolutely. Definitely agree with that. All right, looks like we might not get Peter back up here. But I do want to move into just, a couple minutes for the speakers up here to close out, talk about other stuff. Again, do hang on for the end. We're going to talk just another minute about some of the trades that we might be placing, how you can be involved with these trades and helping us make that decision. Daniel, it was an absolute pleasure having you on. Any closing words? And I also know people can check you out live in about an hour and a half.
Yeah, I should probably run and prepare for that. So we do 7 Investing Now live Monday, Wednesday, and Friday at noon. And it's really an hour looking at the news of the day, but through a long-term investing lens. We have guests on, we talk to me. It is a lot of fun. So I hope to see some of you join me there. And of course, you can check us out at 7 Investing Now. It was a ton, at 7investing.com. It was a ton of fun to be part of this. Thank you, guys.
Always a pleasure having you on. We love Seven Investing and highly recommend that you check out those links in Dan's bio. Cool. Let's go on to Gurgavin.
Yeah, did you find that? I tagged you to.
Oh, yeah, I just commented.
Oh yeah, so Palantir, I sold these puts. I sold 1,000 puts on Friday. I got 106,000 premium, and I bought more Palantir with that money. So basically, I bought around how many? Yeah, 2,400 shares for free. I'm up, I think, almost 4 grand on them. And the Palantir puts are down 8%, making me 10,000 on that too. And I'm planning to cover before noon, hoping for Palantir to go up a bit more to
So
25.
wait,
Yeah.
can you explain how you're going to cover here?
Yeah. So when you sell puts, you get paid, right? So when I sell puts, and I'm basically telling me if Palantir goes to $18 before the expiry, I will buy the shares from them at $18. So for that, I get paid to take the risk. And to cover the puts, I buy the puts back basically on the market.
Okay, so interesting. So you're not planning on having these puts out there for very long.
Oh, no, 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 no.
And, I actually haven't personally sold puts beforehand. What's that process like of buying them back?
I mean, if you use IBK, right, you just sell them like a normal stock.
Okay, cool. And then you're able to just buy them back at, obviously since they were down a little bit today, so you're able to go
Yeah,
ahead and
so
cover
right
that
now they're
position.
out 8%. Expect them to be down 10%. If you see another 0.5 or 50, 60 basis point move in Palantir, it should be down 10%. So,
Okay, awesome. And anything else you wanted to chat on today?
yeah, even like SPY, I sold covered calls to get the premium. So those are down 28%. I'm down 7,000 on that. But with the SPY comments, I'm almost at 40,000. So it was basically a
Really?
hedge to collect the premium on the SPY covered calls I sold. Same as you now.
Got it. Got it. Awesome. Well, everybody, please, do keep an eye on everything that Gurgavin is doing so you have the opportunity to learn from him. He's going live often. He's sharing his trades. He's obviously putting up screenshots. So it's pretty transparent. So really highly recommend checking him out. Peter, we got you back up here.
Hey guys, how's everybody? Sorry I lost you. Crazy
Yeah,
storm
no
on the upper
worries.
crazy storm on the Upper West Side. I lost everything. Anyway,
Got you.
just to wrap it up, amazing to listen to Gurgavin and everybody here with it just look, guys, it's 35 years into this. I am a student of the market, right? I can learn from everyone, and everyone should always stay teachable on this thing because there are a lot of people doing good stuff here. There are a lot of people who are going to teach you about long-term investing, about day trading, obviously Gurgavin about incredible option activity, right? I'll do a shout out to Quant Data. They are offering unusual option activity to the retail investor. A shout out to Wall Street Global Trading Academy. Check them out. That's me. You can learn about technical analysis. We do mentoring for everybody. So, guys, just avail yourself. Pay attention. Avail yourself about all this stuff, right? People with experience who've been doing this a long time have seen this movie before. And they're going to share, if they're nice enough and honest enough and transparent enough to share their experience with you guys, just lap it up. It's amazing. This is the most exciting time ever to be in the market. So reach out to me. I'm always available. There's a lot of great stuff on the call today. Thanks, Kev.
Always a pleasure having you on, Peter. Hopefully we'll be able to hear from you again shortly. Cool. Nick, anything you want to chime in with?
I'll just say, since I'm going back to school, this will be my last Good Morning FinTwit on a Monday morning for a while. So I leave you guys in good hands with Peter, stock market news, Gav. But I will be hopefully on the Fridays, 4 p.m., just to give some insight. But yeah, credible market. But just wanted to say this is going to be my last Good Morning FinTwit for a while. But hope everybody has a good one.
Good luck at school.
Yeah, great luck at school, Nick. We'll have you on spaces that work for you from a time perspective. And also everybody, for if you're in the audience, I think most people are familiar, but I have my personal account up here as well. That's Golf Blacksburg. This is the Wolf account, which is the company that I work for and that I run the account. So you can just check both of those out. All right, Evan, anything else you want to go over?
Yeah, I just want to throw one in here at the end. I feel like a lot of people were talking about what they're doing and stuff like that. And you know, it's difficult to maybe hear when they're saying it. The best way to always follow what these amazing speakers are doing is to just follow their Twitter. They're gonna put out what they're doing, stuff they're doing, everything that's going on. So if you want to stay up to date with these amazing speakers we're able to get up here, just click in, follow their accounts. I know Daniel had to leave. I believe his thing is Worst Invest Trade 7 or something along the lines of that if you want to look him up. And then just one more massive thank you to Bullish Rippers, who kind of helped us out and doing some stuff with that. So I believe the Bullish Rippers account is up here as a speaker. It's like a raccoon, it's green or whatever with money signs. Just check that account out. I post from it. They've been really great in helping us with this FinTwit, space. But yeah, check out all the speakers we have up here if you want to stay up to date with them and get really, really, really amazing content.
Awesome. Okay, I'm going to go ahead and finish this out with a couple of small things. For this week, going to have a pretty packed week of spaces for anyone that's interested. Tonight at 8 p.m. EST, I will be co-hosting a space, which is going to be basically a startup pitch space. So we're going to have a series of startups that are going to come. They're going to run through problem, solution, TAM, a bunch of other things like that. And then you'll have, the opportunity to hear a panel of actual venture capital judges go ahead and give some comments back on that, give some questions, things like that, kind of learn from that type of stuff. Not sure if there's anything on Tuesday just yet, but on Wednesday, we'll also have a space at 7 p.m. EST, on Thursday at 8 p.m. EST. And then on Friday, we wrap up the week. Myself and Stock Market News at 4 p.m. EST. We cover, how did all the trades do that we talked about in this call? What was the week like in the market? What can we learn from this week? And obviously the one that we all go ahead and place, that's going to be kind of the paid trade. We really look into that and say, what can we learn from that? Again, I will be making a post probably within the next hour or so that's going to list out a poll with different puts and calls that we can go ahead and pick from. And then we're going to probably put that out for a few hours. We're not going to rush it. Last week, we were like, hey, we really want to just get this trade out. We're going to wait and see for things to break support and resistance this week. We really want to take our own words to heart, where it's more about finding the right opportunity, not the most opportunities. And then just continue to bring a lot of information to the audience. So thank you. We've thanked the speakers many times, but the listeners, you make it all worth it. You make it fun in the mornings, getting up. It's a lot easier. We're excited for Mondays. We love this. We want to make the best show possible for you. So thank you so much for coming in, and we'll see you all tomorrow or soon.
One thing with you guys listening, just if you guys have any feedback or anything like that, like Gav just said, we are doing this for you guys, like you guys and girls. Sorry, just how I speak. But yeah, so we really, our goal with this is to bring as much value as possible. So if there's any way we can improve that and make these spaces more valuable to you, please just slide into either my Gav's or the Wolf Financials DMs and just let us know what you think we could do better.
Absolutely. All right, everybody. Have a fantastic rest of your Monday. Let's go make some money. We appreciate you all. Take care.